Hello everybody, my name is Michael Quinn. I'm one of the directors and co-founder of the Quinn Group. This week on Quintessential TV, we present another one of our videos. Today, we'll be discussing the following topic: the ATO and amended assessments for undisclosed income. The following AAT cases concern taxpayers' objections to amended assessments issued by the Commissioner. The amended assessments included previously undisclosed deposits in the taxpayer's assessable income and applied administrative penalties and shortfall interest charges in relation to the undisclosed amounts. The first case was the TOC processing case, and that involved a series of deposits from a foreign company into the bank account of an Australian company, TOC Processing Pty Ltd, being the taxpayer in question. The funds, totalling about $4.5 million, were then transferred to a related Australian entity before a large portion of the funds were transferred into 3 different companies incorporated in the British Virgin Islands. The Commissioner issued amended assessments to include these amounts in the taxpayer's assessable income. The taxpayer contended that the amounts related to batch processing payments made via the Australian companies to facilitate payments made between the foreign companies. The second case was the Goldsworthy case, which involved an individual taxpayer who was the same individual that controlled the Australian company in the TOC processing case that we've just spoken about, who lodged tax returns with nil or nominal taxable income. Following an audit of the taxpayer's affairs, several undisclosed deposits into the taxpayer's bank accounts were identified. The Commissioner issued amended assessments to include these amounts in the taxpayer's assessable income. The Chihuahua case involved an individual taxpayer who received a number of large bank deposits from numerous gaming venues over several years, totaling approximately $2 million. The Commissioner issued amended assessments for the years in question, including assessable income calculated by reference to the funds the Commissioner considered necessary to produce the gaming receipts, being $2.3 million. This was based on the fact that the poker machines that the taxpayer largely played gave a maximum return of 90% over time. In each of these instances, the AAT affirmed the Commissioner's amended assessments, finding that the taxpayers had not discharged their burden of proving that the Commissioner's assessments were excessive. By way of background, the burden of proof and evidence is under Section 14 ZZK of the Tax Administration Act, and the taxpayer has the burden of proving that the Commissioner's assessment is excessive. In this regard, the taxpayer would not succeed in its objection merely by proving the nature of any unexplained deposits. Rather, the taxpayer is also required to prove what their actual taxable income is for a particular year. In each of these AAT cases, the taxpayer had not discharged the burden of proving their actual taxable income, nor had they provided sufficient evidence of the nature and source of the deposits, whether being loans or otherwise. Much of the evidence provided was self-serving, unsubstantiated, or inconsistent. Witnesses were also not available for examination or otherwise unaware of the matter in question. For the same reasons, the AAT was also unable to remit the penalties imposed. It's therefore crucial that taxpayers and their advisors maintain appropriate records to substantiate their assessable income, in particular when related to the source and nature of large deposits made into a taxpayer's bank account. You also have to consider the amendment period. In the Chihuahua case, the Commissioner also formed the opinion that there had been evasion of tax, thus allowing the Commissioner to issue amended assessments beyond the standard amendment period as per Section 170 of the Income Tax Assessment Act. The taxpayer submitted that the Commissioner has the burden of establishing he had enlivened the power to issue an amended assessment out of time. This was rejected by the AAT, finding that there was no such burden on the Commissioner. In doing so, the AAT also considered its jurisdiction to hear and determine the issues purported by the taxpayer. The AAT accepted the Commissioner's submissions that the AAT does not have jurisdiction to determine whether the relevant assessments are invalid, with reference to Land Common Commissioner of Taxation, a 2022 case. Rather, the matter was open to the taxpayer to show on the objective facts that there was no grounds for the opinion that there was evasion of tax. Accordingly, where the Commissioner has issued amended assessments on the opinion that there has been evasion, the taxpayer is unable to object to the assessments on the basis that the Commissioner's procedures in making the assessment are invalid. Rather, the taxpayer should approach its objection from the angle that the assessment is excessive, with no relevant grounds present for the Commissioner's opinion that there has been evasion. If you'd like to know more or need help in this regard, please contact us. You're welcome to email us at info@quinns.com.au, call us on 1300 Quinns, or visit our website www.quinns.com.au. We'd love to get your feedback in relation to Quintessential TV, so please like, comment and subscribe. We look forward to seeing you all again next week. I'm Michael Quinn. Bye for now.